Hello, everyone. Happy Friday to you, and welcome to the last edition of the Extreme Speed Live for this week. Now, before we kickstart the session, let's confirm that we are good to go this morning. So let me know in the comment section. Can you see my screen clearly? Are there no freezes? Can you hear me without distortion? Please let me know in the comment section by typing hi. Typing in hi in the comment section just tells me that everything is fine and okay. So I would like to see some feedback please in the comment section, and in fact if there are any issues as regards to the sounds and the visuals, please let me know in the comment section, as I will be doing the necessary adjustment to make our experience better out here. So I would like to see some feedback, so let's run through the comment section to see what we have right here. Okay, I think I see some couple of comments here. 191714440 8669 2592 61134. I see your comments, everyone. Thank you very much. Hey Carrie, how are you doing today? And good morning to you too. Glad to have you around with us this morning. So I think these are very positive feedbacks here. So in that regard, I will be going into the business. So once again, I welcome you all to yet another promising edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be looking at the market structure from a new technical standpoint using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of the assets on our watch list for this week. Well, since the beginning of the week, we have been monitoring four major assets, which includes the US All Spot, the USTech100, popularly known as the Nasdaq. We also have the GBPUSD and the XAUUSD, popularly known as the gold spot. And in fact, we've been doing pretty well since the beginning of the week, though we had some consolidation choppy scenario that went on for about 2 or 3 days, but thank goodness we were patient enough to capitalize on our setups on this one. So we are going to be deliberating on this and looking at the, if we do have any running position, see how to manage that one, while we also strategically position ourselves ahead of the New York session today. Now, for those who are joining us for the first time, you're highly welcome on board. Glad to have you around with us. And you might be asking, what is it that we're doing here today? Well, as technical traders, we come together as a community in anticipation of the New York session, where we come to review our existing position if we have any, and of course, try to sniff through the market structure to look out for potential trading opportunities that we can take advantage of during the New York session on a daily basis. So tune in every day, 10 a.m. UTC, 11 a.m. West African time, and you will be part of this session. And I encourage you to always to stay tuned in to the end of the session so you don't miss out on any of the insightful ideas we shall be sharing today. And of course, be part of the subsequent editions, as the more time you spend with us, the better you get to understand how this works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are very much welcome on board. Now, today being the last trading day of the week, it comes with some peculiarity, which of course is more psychological, and that is the fact that since today is the last trading day, majority of participants in the market who are taking advantage of a prevailing trend will want to be closing in some of their positions ahead of the weekend. And this, of course, normally reflects on the chart as price action gradually transitioning into the opposite direction of the prior leading price action. So we are going to be taking all this into consideration while we review our current positions on all of these assets. So, with that being said, let's dive right into the business. And as usual, the first thing we normally do here is to check on the economic calendar. And for those who have been following me for a while now, know how important this checking the economic calendar is, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us be able to capitalize on any potential trading opportunity prior, during, and even after this event. Now, yesterday we looked forward to two high impact events from the US economic docket, which is the producer price index and the retail sales data. And in fact, the figures were quite very positive as we saw expansion in both economies here. And in fact, with the data we've been receiving from the US economic docket so far this week, all road is leading to a potential interest rate hike later in the month. And going into today's trading session, we're looking forward to another high impact event, which is the Michigan publication for the Consumer Sentiment Index. And for those who don't know what this event is all about, this is a survey published by the University of Michigan to identify to get data of personal consumer confidence in the economic activity. So it gives us a picture of whether or not consumers are willing to spend money. Now, generally speaking, a high reading is considered as positive for the US economy, while a low reading is considered as negative. Now, if we look at the previous data here for the month of August, it came in at 69.5, and economists are projecting a 69.1 for this month of September, giving us a clue that there is some reduction in that data there. So we shall be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? But one thing we do here as technical traders is to sniff through the current market structure to identify opportunities in such a way that we look out for patterns and structures ahead of this event that will make us position ourselves in such a way that we can capitalize on these moves. So with that being said here, and with the informations we have gathered so far, let's dive right into the business. Now, as usual, the first asset we are going to be looking at this morning is, of course, the US oil spot. And in fact, we've been doing phenomenally well since the beginning of the week on the US oil spot, as we have continued to ride this momentum all the way to the upside. So we've been buying this asset since the beginning of the weeks, hereby giving us multiple entries to maximize the potential of this bullish move. Now let's look at what happened here in this market at the beginning of the week and what really led to the idea of buying this asset. Now at the beginning of the week, we had a simple setup that we'd identified where we saw price action confined within the $86.89 level and the $86.20 level to give us an insight into the level of uncertainty in the market at that particular point in time. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we want to exercise patience, waiting for either a breakout or breakdown of that range to give us an opportunity to either buy or sell. And of course, at no point in time did we notice any breakdown of structure. Instead, we saw price break out of the resistance line, retest of structure a couple of times before that momentum began. And since the beginning of the week, we continued to add more positions. Remember, we acknowledged and identified levels such as the $88.50 area. We also had the $88.50 level. We also had the $89 area, all of which we used to capitalize this bullish momentum all the way to the upside. And for those who have been part of this profitable journey since the beginning of this week, well done to you for being on standby to capitalize on this move. And in fact, personally, I have been taken out of my positions right now. You know how we do it in this community. When price action moves significantly well in our favor, we normally move our stop losses to secure our current position. But if you still have a buy position running at this point in time, I will be advising you to move your stop losses and secure this current position. Remember, today is the last trading day of the week, and it's always peculiar that on days like this, that majority in the market who are taking advantage of the prevailing trend will definitely want to be closing in some of their positions ahead of the weekend, and this of course will reflect on the chart as price moving in the opposite direction. But that doesn't mean that price will go into a sell-off at this point in time, but we just want to be take a precautionary measure to ensure that we are still on the positive side of this trend. So once again, well done and kudos to everyone who have been part of this profitable journey. Now, going into the New York session today, the last New York session for the week, what is going to be our plans? Are we going to continue buying the US All Spot for today? And if we are buying, what do we want to see? Or are we going to be getting ready for a sell-off? And if we are going to be selling, what do we want to be seeing on this chart to guide that move? Now, before we go into the details here, I would like us to run through the higher time frame. Of course, this will help us have an holistic perspective into what is going on in the market, and of course, we might be able to see some structures that we can use in conjunction with the patterns on the 1 hour time frame to make a well-informed trading decisions. Now, to do this, I will be scaling up into the 4 hours time frame. This is where our analysis started at the beginning of the week, if you remember. So at the beginning of the week, what we did in this market was to take into consideration the nature of price action in the last 2 to 3 weeks. And of course, the most dominant factor here is the fact that price has been bullish since the last week of the month of August. And to emphasize that, we have connected the series of higher lows here to give us an ascending trend line to work with for this week. Now, besides the ascending trend line was our key level situated at the $87.50 area. Now remember, we acknowledged that price action fell into a range since the beginning of this month, as we saw price confined within the $87.50 level and the $85.50 area to emphasize the level of indecision at that point. And normally, whenever we have this kind of scenario in the market, we always exercise patience, waiting for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, something interesting happened in this market structure, as this was where price action was at the beginning of the week, as you will see here. And with the nature of the buy pressure around that area, we anticipated an uptrend, so we were able to buy even before the breakout of the resistance line happened, hereby giving us that privilege to capitalize on that uptrend scenario. Now, since last week Friday, in the last 1 week now, we have a trend line which has been helping us to guiding this bullish momentum since the beginning of the week. And of course, we are likely going to be using this trend line today too as well. So I would like to extend it a little further into the future to see if price is going to come back, retest it to incite an uptrend continuation. Now let's look at what has been going on here in the last 16 to 20 hours now. We can see here that price action has finally found a new high at around the $90.50 level. So we do want to be marking out these levels on our chart, as we shall be needing them as a reference point to guide our uptrend continuation if price action ever breaks out of that structure. So the $90.50 level is going to be an area we shall be using to capitalize on an uptrend continuation in this market. So we saw what happened here about 4 to 6 hours ago. We saw that as soon as price tested the $90.50 level, we saw some selling pressure resume at that point. Now, if we consider the impulsive move that started on Wednesday that brought price into that structure, you will see that a retracement phase seems long overdue. Now, are we going to be witnessing a scenario where price would retrace back into structure to incite an uptrend continuation, or are we going to be having a situation where the trend line, that ascending trend line, will be broken to the downside to incite a sell-off? Well, let's see what is going on right now. So we have an impulsive move that happened that brought us into this point. Now we've been in the last 6 hours or so, we have been noticing selling pressure in this market, which has a tendency of inciting a retracement. Now, how far will this bearish momentum go? Well, to get that, we will need to use our Fibonacci retracement tool to project an area where we might be seeing some buy pressure to incite an uptrend continuation. So if we run our Fibonacci retracement tool through the impulsive move right here, we shall be aiming at an area between the 50 and the 78.6% of that previous impulse leg. Sorry, I want to adjust this right here, so let's have it like this. So we have between the 50 and the 78.6%, somewhere around here. So I always like this zone to be colored in light yellow, so I will give it a lighter yellow, and let's label this area a potential buy zone in this market. So what we want to see right now is for price to come into this area, and the appearance of buy pressure here is likely going to be inciting an uptrend continuation. And look at how beautifully this zone we just identified here shares a confluence with an ascending trend line. So what we are going to be looking forward to now is to see how far will this bearish momentum go, and the end of this retracement will reflect on the chart as buying pressure or reversal patterns in the form of double bottom, head and shoulder, whichever case it may be, respecting the ascending trend line to incite an uptrend continuation. So if this retracement continues to the downside, we shall be looking out for opportunities around this area to capitalize on the uptrend move. However, it is not all the time price action does this. Now, before I even go into that, there is something I would like to clear here. Now, the way the retracement phase is going right now doesn't mean that we cannot take advantage of that move. This is more or less going to be a counter trend opportunity, and if you feel comfortable taking counter trend opportunity, if you are a scalper, short-term trader, and you feel comfortable taking counter trend opportunity, you might want to be part of that retracement move that will project a minimum of 60 to a maximum of 130 pips to catch here if price drops that far. So if you want to take advantage of that opportunity, you might want to be looking at an area anywhere below this structure here, that is the $89.50 level. So we want to be looking at that area to capitalize on selling opportunity. But personally, I'm not going to be taking that move, as I will be waiting for price to come into that potential buy zone, looking out for patterns and structures that supports the idea of an uptrend move. However, if price action continues to the downside, breaking down that trend line, then I will look forward to a retest of structure to be part of a bearish move to the downside, and a breakdown here will simply mean that the ascending trend line may no longer have the capacity to continue to negate that bearish attempt. So that is how we are going to be joining any potential move if price breaks down the $89.50 level. However, if price does not drop that far and instead it continues to find higher highs, then I want to be looking forward to a breakout of the $90.50 level to capitalize on the uptrend continuation, hereby giving us more opportunities to maximize the uptrend move in this market. So you can see how important this current structure is right now. I would appreciate that you mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions on this particular asset. So this is where our center of focus is going to be for today on the US All Spot. Let's see how the market will react to the $89.50 level. If it breaks down the level right here, that is this level here, then we could be looking forward to the continuation of that retracement move, where we shall be positioning ourselves anywhere around here to capitalize on that uptrend continuation if buy pressure resumes around that area. But please note that a breakdown retest of this ascending trend line will incite a momentum shift. So please, let's have all this in mind. Mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions. And don't forget that a breakout of the $90.50 level will be welcoming more buying opportunities in this market. So this is my view on the US All Spot for today. It's quite a simple setup. Let's endeavor to mark out these levels so that we can be on the same page together. So I wish you best of luck on this one. But if you have any questions whatsoever as regards to the setup or as regards to what I explained so far, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset on our watch list. All right. So I see some couple of comments here. I see one from 4114, 21883, and 411305. Thank you very much, guys, and thank you for checking in on us. With the absence of no questions here, I want to assume that we are all on the same page, so we shall be diving right into the next financial asset on our watch list. So the next asset on our watch list for today is the USTech 100, which has been doing pretty well since the beginning of the week. In fact, we've had roller coasters of buys, we sold, and then again we bought again, and on all instances we were able to scoop in significant amounts of profit from this particular asset. So I would like us to run through how the week started for us here in this community. What did we see on this market structure that incited the decisions we made throughout the course of the week? So at the beginning of the week, it was more of an indecisive phase, which lasted about 8 hours to 10 hours or so, as we saw price trapped within that range that was between the 15,323 and the $15,288 level. And you know how we do it. Whenever we have this kind of simple range like this, we want to exercise patience, waiting for a breakout or breakdown of that range to give us an opportunity to trade. And in fact, it was a breakout of the range that happened, which triggered our first buy position for the week, as you will see here. And in fact, for those who missed out on this opportunity, the market came back, retest structure to inside that uptrend, continuation. And in fact, we had a couple of positions here as we added one more position had the breakout of the 15,375 level to maximize the potential of this bullish move. And in fact, the first position moved about 150 pips, while the second position moved about 90 pips, making a total of 240 pips move before the bearish momentum began. And of course, you know that we move our stop losses accordingly, secure the position, and we were taken out with a modest size of profit on the first day of this week. Then on the second day of the week, we begin to see some bearish traction begin as price continue to reject the 15,480 level. Just right around this area, we saw the selling pressure resume here. We saw how it became difficult for buyers to break out of this area, and as a result of that, we begin to anticipate the bearish momentum. And of course, remember that we had an ascending trend line identified here, which we said we were going to be using to guide our trading decision. And once the trend line breaks to the downside, we want to be getting ready to sell. And of course, we saw the breakdown, we saw the retest of structure, which also gave us about how many pips was that one? We had about 150 pips move. We had multiple entries on that one too to maximize the potential of that bearish move. So it was quite an interesting first half to the week for us all in this community. Now on Wednesday, we capitalized on more opportunities after noticing buy pressure resumed just right above our key level situated at the 15,250 area, and the inability of price action to significantly break down that key level was quite a sign that we might be in for an uptrend continuation. And we anticipated that by placing ourselves right above the structure. In fact, we saw the breakout retest, and since that moment, we have been buying this asset all the way to the upside. Kudos to everyone who had been part of this profitable journey as price action continues to climb new highs in this particular market. For those who still have a buy position running right now, it is advisable that you move your stop losses accordingly to secure this current position at this point in time. And anywhere around the 15,425 and the 15,450 seems most appropriate to move all stop losses to. Now remember, we do want to be given enough room for price action to breathe. We might likely be seeing some retracement before the uptrend continuation happens. So with a well secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying? And if we are, what are we looking out for to be part of the uptrend? Or is there likelihood that profit taking activities will come in today to push price to the downside? And if it is, what do we want to be seeing on this chart that will make us join that bearish move? Now, the first thing I would like us to do here before we go into the details of what our expectations is going to be looking like here is for us to run through the higher time frame so that we can have an holistic perspective of what is really going on in this market. Now, to do this, we want to be scaling up into the 4 hours time frame where we were able to identify a simple setup to guide our trading decisions for this week. And on the 4 hours time frame, we had a couple of ascending trend line which has been supporting that bullish idea. And not until yesterday we finally saw the breakout of this 15,470 area, which is a significant level that has played a major role in determining the movement of price action since the beginning of this month, as you will see here. And of course, we can say for sure that this area has been characterized with a lot of selling pressure since the beginning of the week. Now, right now that we have a breakout of that 15,470, is it going to be a new platform for more buying opportunities in this market for today? Well, let's look at the lower time frame to see what to look out for. Now, before we scale down into the lower time frame, let's acknowledge the highest point that price action has been for this week, which will be duly situated at the 15,520. So you do want to be marking out these levels on your chart, as we shall be needing them as a reference point to guide our independent trading decisions today. So for me to continue buying the USTech 100 for today, I would like to see price break out of the 15,520, retest of structure to insight an opportunity to add more position to our existing trade. Now, there are two ways to which we can capitalize on this move right here. And for those who have been with me in this community for a while now, you'll be familiar with this strategy. Now, for those who are profitable so far this week, that is, if you have been part of the profitable journey, you bought with us, you sold with us, and right now your portfolio is in the positive side, then you can afford to leverage on the profit you had made so far this week to test waters above the 15,520, and let's place a buy stop order above that structure to capitalize on the uptrend. And if it doesn't work, then we know that we're just leveraging and risking some of the profit we had made so far this week. So we're still going to be on the positive side of our portfolio. However, if you are new with us today, this is your first time trading the USTech 100, and that is you're coming in from a clean slate, then I will be suggesting that you exercise patience after the breakout of that structure, as you will be needing confirmation for us to be part of the uptrend. So we look out for the breakout of structure, retest, and the appearance of buy pressure here will be a beautiful opportunity to join the uptrend move. So that is how we are going to be capitalizing on an uptrend scenario at this particular point in time. Now, in as much as we're looking out for buying opportunities here, considering the strength of the momentum we've been enjoying since the beginning of the week, it is very, very important that we also take into consideration the potentials of sellers. That is how we've always been doing in this community. We always ensure that we are very dynamic. Remember, the financial market is a very fluid environment, and for you to be consistently profitable, you must be able to shift momentum as soon as price action changes course. Now, if you look at the structure here, since the beginning of this month, I think since last month, since the beginning of this month to be precise, you've seen that the area between the 15,550 and the 15,470 has been a strong selling niche in this market, and for price to be back into that zone, it is quite clear that we are within a seller's territory. And this, of course, the idea of this alone, it's enough for us to consider the potentials of sellers too as well. Now, if we are going to be joining a bearish move here, what do we want to be seeing on this chart that will make us feel comfortable to sell the USTech 100? Now, to do this, I would like to scale down into the 1 hour time frame, as we have a trend line that we are going to be using here to guide our trading decision. Now, if you look at what has been going on since the midweek, you will see that we've been noticing higher lows in this market. And if we bring out our line chart, you will see that we've been connecting the series of higher lows. Here we have a beautiful ascending trend line to work with for today. So if I can do some little adjustment here so that it can capture majority of this pivot low, we should be having something like this. Now you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy position, and of course look out for more opportunities to capitalize on the uptrend continuation. And the way things are going right now, price still remains just right above that ascending trend line. But if anything of a breakdown of the trend line happens today, then we are going to be getting ready to sell. Remember what I showed you on the higher time frame? I told you we are within a seller's territory, and if price could break down this ascending trend line, then we should be getting ready for a momentum shift. Now remember, we are not getting too excited here, as we will need some confirmations before we jump into the sell position. Now look at this. If price breaks down the ascending trend line like this to the downside, remember we are not getting too excited here, neither are we having a sell stop. We are going to be waiting for confirmations to happen where we want to see signs that it has become difficult for buyers to break out of that ascending trend line. And this, of course, would reflect on the chart as price doing a retest of either the 15,470 and the ascending trend line to inside, selling opportunities that we can now use to join the bearish move to the downside. So you can see how crucial the 15,470 and the ascending trend line is for us to determine what our next line of action will be. So a breakdown of the structures will be welcoming selling opportunities, while a breakout of the 15,520 will be welcoming more buying opportunities in this particular market. So you do want to be marking out these levels, as you will be needing them as a reference point to guide your independent trading decisions for today. So these are my views here on the US Tech 100. If you have any questions regarding what I said so far, or you need me to do any further clarifications to this current setup, feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds as always to see if there are any questions whatsoever before we move right into the next asset on our watch list. And you can as well use that time to mark out these levels on your chart. All right. So, in the absence of no questions here, I want to consider this as a confirmation that we are all on the same page and that we are good to continue with our analysis. So, with that being said, we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is the GBPUSD. Now on the GBPUSD, we had an interesting 24 hours here where we were able to scoop in over 120 pips on multiple entries on this one as price dropped significantly in the last 24 hours following that positive data coming in from the producer price index and the retail sales data from the United States. Though before this breakdown of structure, before the sell pressure began yesterday, price has been a little bit choppy. We have been buying. We bought a couple of times, which really didn't move very well as both positions was close at a worst case scenario break even. And this further emphasized the level of indecision prior to yesterday's trading session. And this is could be connected to the anticipation of the major events we were looking forward to this week. Now remember, at the beginning of the week we bought right here at the breakout of the 1.24940. Price moved about 40 pips. We got taken out of that position with a small size of profit or worst case scenario break even. And this was the reason why we bought. Let me run through that quickly. Remember that at the beginning of this week we acknowledged that price action has been on a strong bearish momentum, and this further was emphasized with this descending trend line that you see on your screen right now. And at the beginning of the week, we saw our price started the week on a strong bullish note as we saw price break out of the descending trend line. And from a technical standpoint, when price breaks out of a trend line like this, it's a sign that a trend line may no longer have the capacity to continue to negate the bullish attempt. And in that regard, we bought above that area. We were taking out at a worst case scenario break even, and in fact we looked forward to a retest of the trend line to add more buy position. So we saw price break out of structure. Price came back to retest the trend line, and in fact we saw buy pressure here, which lasted about 7 hours before this momentum came in. We joined again, moved our stop loss accordingly. We were taken out again with a modest size of profit as price drop to the downside. Now, while these old buy positions we were taking advantage of was happening, we saw that our price gradually transitioned into a lower highs scenario here, giving us clues into how strong the sellers are in this market. Now, during our live session yesterday, we acknowledged the breakout of the trend line, and then we saw price cut within a range here between the 1.25 and the 1.24875. So this was where our center of focus was during our live session yesterday. And of course, you know how we do it. Whenever we have a range like this, we want to exercise patience, waiting for either a breakout of the range to give us an opportunity to buy, or the breakdown retest of the range to give us an opportunity to sell. And of course, we saw what happened here. Yesterday, we saw the breakout retest of the structure, inciting the bearish momentum. And since yesterday, we continue to sell. And I told us all yesterday that for those who had missed out on this breakdown retest of the 1.24875, that we can get ready to join the breakdown of the 1.24620. And you see what happened here. Price dropped during the first hour of the New York session. I think after the data that came in yesterday, and we also identified levels such as the 1.245 to add more position to our exiting trade. So though the week started very slow, but our patience paid off at the end of the day, as we were able to capitalize on that bearish move that came in during the second half of this week. And once again, congratulations to everyone who are taking advantage of this move. Now, going into the New York session today, of course, we don't have any sell positions running prior to the session, as I personally added one more around this area, and if you are taking advantage of that one, it's quite okay and beautiful. Just ensure that you move your stop losses accordingly, and I will be sharing with you why it is very important that we move our stop losses, as anything could still happen from this area. Now look at what happened here. So since the beginning of today's when I was trying to decipher what our next line of action would be for today, I observed here that since price got to this lowest point at the 1.23975, we begin to see the appearance of buy pressure since the later part of the New York session yesterday. And this resulted into a reversal pattern looking like the double bottom structure. As we saw, price came into this area, it came back here, and the inability of price to break down the previous low was a sign that a bullish momentum is gradually gaining behind the scenes. And in fact, we have a double bottom structure, which from a technical standpoint is a strong reversal pattern. And you all know how we do it here in this community. When we start seeing reversal patterns like this, the next thing we want to be doing is to identify a neckline which lines exactly with the 1.24150 area. And all we need here to validate this reversal pattern is a breakout retest of the neckline. Now, if you look at what has been going on since the early hours of today, we saw here how price broke out of the neckline, and it appears price is going through a scenario where it is going to come down and retest the neckline, where the appearance of buy pressure will be inciting an uptrend scenario. Now we are at a crucial moment in the market right now, where price is just right back at that neckline area at the 1.24150. Now at this point in time, patience is hereby required here. So we want to see how the market is going to be reacting to the 1.24150. So if we begin to see buy pressure resume around that area, then definitely we want to be getting ready to join an uptrend scenario. Now, to give a visual representation of what to look out for around here, I want to see something like a double bottom structure, head and shoulder pattern. Most importantly, I want to see that sellers are finding it difficult to stay below the 1.24150, and this would reflect the tendencies of buyers to push price to the upside. And if this happens and continued buy pressure resumes here, then we will have no other choice than to join. Then a breakout of both the 1.24350 level and that ascending trend line. What a beautiful confluence we have here. And that descending trend line, will be welcoming more buying opportunities in this market. So let's see how this is going to play out. I'm not saying that we are going to ignore the potentials of sellers here, but the appearance of buy pressure around this area where price transitioned into a reversal pattern is looking more promising at this point in time. And if we consider today being the last trading day of the week, where majority in the market always try to round off their positions ahead of the weekend after being part of a bearish move during the week, I'm of the opinion that we cannot ignore the potentials of buyers too, as well as we could see some reversal setups that will lead to both the breakout of the descending trend line and the 1.24950 level. So we want to be marking out these levels on our chart, and let's be on standby to capitalize on that move. Now, in as much as we're looking out for a reversal setup here that will push price to the upside, we cannot ignore the potentials of sellers. In fact, in the last 24-36 hours, price action has been going through lower lows and lower highs in this market. Now, for me personally, for me to sell or add more sell position to my existing trade here, I will need price to take out the 1.23975, a level which of course firstly is the lowest point since the beginning of the week, and of course it has been characterized with buy pressure here since the New York session yesterday. So I would like price to take out all the buy positions here to give me some confidence that we are in for another wave of bearish momentum. However, there is something I would like to state here, that we might be opportune to be part of a bearish momentum even before the breakdown of that zone happens. Now, if it so happens that price, instead of rejecting this area to incite an uptrend breaking out of that descending trend line, we might see a situation where this area becomes a barrier for buyers and selling pressure resumes around that area, hereby increasing the chances of price action going to the downside. So if we begin to see setups around this area that portrays tendencies of sellers coming in, as we see buyers finding it difficult to break out of that descending trend line, then we want to be part of that bearish move and then look forward to adding more positions at the breakout of the 1.23975 level. So that is how we are going to be selling today. So we do want to be marking out these levels on our chart. Very, very important, as it will be guiding us on what our next course of action will be here. So our center of focus for today is basically between the 1.24350 and the 1.23975, where depending on how price reacts to the structure will determine where we shall be heading to on the last trading day of this week. So that is my view here on the GBPUSD. If you have any questions, feel free to let me know right in the comment section. So as always, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we dive right into the last financial asset for the week. All right. So in the absence of no questions, I want to assume that we are good to go. So permit me to move right into the next financial assets on our watch list. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot this week, we've done fairly well so far. Remember, we have been selling since the beginning of the week, but price did not really move significantly well compared to how we used to do during this time of the week. In the previous week, by now we would have been doing like 500, 600, 700 pips, but this time around we are roughly about above 200 pips at this point in time, and this is connected to the anticipation of the high impact event from the US economic docket, as we saw here that in the last for about 48 60 hours, that's about 2.5 days, price action was trapped within a range right within the $1,913.50 level and the 1,909 area, to emphasize the level of indecision at that particular point in time. Before we saw the breakdown happen, we saw some selling opportunities here yesterday, pushing price to the downside. Now there is a simple parameter here that we have been using to guide that our bearish momentum since the beginning of this week, and that is this beautiful descending trend line here. In fact, this trend line here has been so useful in helping us to maintain our bearish bias in this market. And one of the things we agreed on based on this trend line is that as long as price remains below the trend line, we shall continue to look out for selling opportunities, and the only condition that will make us buy is for price to break out, retest that trend line, as we saw what happened here during the later part of the New York session, which triggered these current buy positions we have running right now. And in fact, if you are taking only one of these positions, you will currently be running with about 80 pips in profit. And in fact, we had multiple entries on this one, so definitely we are doing roughly above 150 pips considering all these multiple entries we took advantage of. And for those who are part of this profitable journey, well done to you for being on standby to capitalize on this move. Now, for those who still have a buy position running at this particular point in time, you know how we do it. The next thing we want to be doing right now is to ensure that we move our stop losses accordingly to lock in this profit. Now, from the look of this current structure here, I would like us to give enough room for price action to breathe, as we could be seeing some selling pressure come in before an uptrend continuation happens. So with this case scenario, anywhere below the $1,915 area seems most appropriate to lock in some profit here, and let's see how this momentum is going to play out. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, if you look at the structure closely, things are still looking very bearish here considering the long term. If we look at what has been going on since the beginning of this month, it's still looking very bearish. Now, to guide our trading decisions for today right here on the 1 hour time frame, the first thing I did was to acknowledge this bullish momentum since yesterday's trading session. So I connected a series of higher lows here to give me an ascending trend line to work with. So going into the New York session today, this is going to be the trend line we shall be using to guide our moves for today. Now, if price still remains above this trend line, we shall continue to feel comfortable in our buy positions, while we also look out for more opportunities to buy. Now, if selling pressure resumes, in fact, in the last 5-6 hours now, we have noticed selling pressure around that 1,919 level, as you will see here. In fact, price action has been trapped within a range in the last 4 to 5 hours now between the 1,919.50 and the $1,016.50 level, to further emphasize the level of indecision at that point in time. Now, selling pressure might come in. It could be profit-taking activity, which could reflect on the chart as a retracement of this impulsive move that we have here. So remember, yesterday we had this impulsive move, and there are chances that price could drop back into this ascending trend line, respect it one more time with some buy pressure on our lower time frame to incite an uptrend move. So seeing a selling pressure around this area doesn't mean that we should panic here, as we're still within the auspices of an uptrend continuation. So we still have a bust up around the $1,913.50 area and the 1,915 area to capitalize on an uptrend scenario. So what I will be looking out for here is for price to see how far will this bearish momentum go, and importantly look out for patterns like buy pressure around this area where I see that sellers are finding it difficult to break down that ascending trend line. Then I want to start joining that uptrend continuation. And remember, we have multiple levels like the $1,916.50, $1,919.50, and the $1,921.50 level, all of which, if we have a breakout retest of that structure, we want to be adding more position to maximize the potential of that bullish move. So that is how I'm going to be buying the XAUUSD for today. However, if we begin to see price drop in such a way that it breaks down that ascending trend line, retest of the zone, then we shall be in for a sell-off. And of course, we want to be part of that move if price breaks down the trend line. Now, I want to share something with you here, which is from a technical standpoint, and that is the breakout of this descending trend line. Now, from a technical standpoint, when price breaks out of a trend line like this, we expect that some point in time price is likely going to come back, retest the trend line to inside an uptrend continuation. So if we begin to see selling pressure around this area or lower lows and lower highs, that shows and reveals that sellers are gradually gaining momentum here, then we would want to be part of that bearish move, where we should be looking at a minimum of 100 pips to catch here if price action does that. And if it gets into the trend line, depending on how it reacts to the trend line here, if we see buy pressure, then we want to be getting ready for the uptrend scenario. So for today, our center of focus is right within the $1,919.50 level and the $1,916.50 area. So let's see what happens here. If price breaks down and we begin to see lower lows and lower highs, then we can afford to join with the breakdown of the ascending trend line to the downside. But if instead the contrary happens here and price goes on to break out of the $1,919.50 level, then we want to be in for more buy positions on this one. So let's keep our options as open as possible. Let's secure the current buy position running while we continue to monitor price action around this area for more trading opportunities. So it's on this note I would like to call it a day here. It has been a wonderful moment out here with you guys, but before we draw the curtain for today, I would like to know if there are any questions as regards to the XAUUSD, or probably as regards to all the assets we have been talking about since the beginning of today's session. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. So I look forward to seeing your comments if you have any, and then we round off for today's trading sessions. All right. So in the absence of no questions, I want to assume that we are all on the same page. It has been a wonderful moment with you guys here today. And in fact, we were able to take on 4 major financial assets, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also treated the GBPUSD and of course the XAUUSD, popularly known as the gold spot, and all of which we were able to identify simple setups using parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of these assets. And so I encourage us all to allow our setups to mature before we jump into any positions on the assets we talked about today. And in fact, I'm very confident that we were able to simulate all the potential trading opportunities that are likely going to be happening based on the current market structure we saw on our charts. For those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today, and I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So I look forward to seeing more of you next week as we get prepared for the new week. Best of luck today during the New York session. I wish you a wonderful weekend, and I look forward to seeing you all one more time on Monday morning on the Extreme Speed Live as we get prepared for the new week. Do have a wonderful weekend, everyone. Bye bye.